This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome back to your TF Metals Report podcast highlights for the week of Monday, May the 20th through Friday, May the 24th, a week that began with lots of optimism for silver and really all the commodities, gold and copper included. They'd finished the prior week charging higher all the way into the final close on Friday the 17th, and that carried over into Sunday night the 19th when trading resumed in Shanghai. Trading got exciting for a while on the COMEX, but at the end of the day it was kind of sideways with a candle that would suggest it doesn't know what to do next. So we had a very busy, full podcast back on Monday, and here's just part of what we discussed. Silver on the daily chart. That candlestick is what's called a spinning top. Went up, went down, finished right in the middle. Slightly green. Usually that means indecision. Maybe it does. Notice like we had a little red spinning top about a week ago. What was that, a week ago Friday? See that one there? After the big green candle right around 28.50. Indecision. What did it do? Went sideways for 2 days and then went crazy for $3. So, again, just nice to see it printing a 3, though. That is working in our favor. That indecision, if you will, continued into Tuesday the 21st, with the metals trading sideways. Silver tried to rally a couple of times, Monday and Tuesday, each time getting up near 32.50 and then somehow falling straight downward. That obviously did not foreshadow happy things for the rest of the week, but we didn't know that on Tuesday. We were still searching for clues, looking for direction. We looked at the short-term moving averages, hoping to find some clues on Tuesday the 21st, and here's how that discussion went. It's gold on the daily chart. RSI 65. Okay, and we're back to looking at the red line as the 5-day moving average. And ever since we busted out back there about the 8th or 9th of May, look, we've been riding that 5-day higher again, finding support at the 5-day again today. Okay? So until it breaks down and smashes down below the 5-day, we are trending higher. We just made a new higher high. Look, we're way above the 20-day. Again, looks like it wants to go higher. Thus, I'm holding on. And finally, silver. Look how far above its 5-day it is. You're riding that 5-day higher ever since early May. Okay? So yeah, it could come down again, but you can see how that's why it keeps finding support down there. Look at all these green candles. Looks. I mean, it may blow off. May go to 33.5, 34 or something like that. That's where resistance should be anyway, up near beginning at 34. It may blow off, blow the RSI up to 80 something. Right, as the dollar index falls a point, it's maybe exactly what happens. And then we're due for a pullback. But for now, these charts just don't suggest that that's going to happen like in the next couple hours. Well, things started to go the wrong way back on Wednesday the 22nd. Copper started to fall, pushed along by CME Group margin hikes on the COMEX copper contracts. And then gold fell in tandem. In fact, the decline in gold actually started on Tuesday. And by the end of the week, we can look back and look at Tuesdays, Wednesdays, and Thursdays' losses. Combine them, it's over $100 an ounce. It's a pretty sharp pullback and correction. It would leave a double top on the chart. Anyway, we didn't know that for sure was coming on Wednesday, but we sure noted the sharp pullback and the big red candle, and that was part of the discussion in that day's podcast. This is what I'm talking about in gold. And I think we're probably in the same pattern now that we are in back here in the first quarter of the year, or at least December through February. Look at what happened here. Okay, we went up in December. Remember early December? Got that ugly, brutal, forced, obvious bank manipulation on Sunday, December 3rd and 4th to create that peak because they were wrong-footed. But then after pulling back, we rallied in late December into that maximum rate cut expectation period and double topped. Double top. Down we go, right? Well, okay, through January as rate cut expectations were being trimmed and rates were rising and everything else. But we came down and actually double bottomed. And what you had here was a range. So when we came back up and got above those old highs. In early March, boom, up, came back, found support, and then rallied to this next level. Now look what we've done. Put in this top in the middle of April, came down, okay, found support 2,300, and now look what they've done. Little double top. How about that? This does not mean we're going to 1,500 or bullshit. We're just in sideways again, like we were for 90 days before, the banks got right-footed and ready for the breakout. It took them 90 days, okay? May take 90 days again. We'll see. But if the dollar is going to be rallying, because it might, watch that chart. The Fed all hawkish, and if the next BLSBS isn't weak, all these different things could easily go sideways here into the summertime. And that sell-off continued on Thursday the 23rd, prompting us to take a look at the updated chart of COMEX gold. Gold falling $56 on Thursday alone. Again, painting that double top on the chart, just like we saw back in the month of December. That led to some sideways action and consolidation for the next 6 or 8 weeks before it was ready to move higher. We may be there again. Well, maybe. All part of what we discussed on Thursday the 23rd. Gold on the daily chart, you can see the damage of the massive red candles below the 20-day moving average. Double top needs to hold this 2280-23 area. Okay? Did not break down below the 50-day moving average during the last pullback. And as you can see, though, we are within $15. By tomorrow, it's going to be even closer than that. You don't think the average banker is salivating, thinking about the idea of closing the week below the 50-day for the first time since, February? After successfully painting a double top? Now, again, back as I went through yesterday, December through February, double top and a price range, which is probably what we're doing now. But they'll want to try to do it, so we'll just see if they can next week. On Friday, May the 24th, the silver price going to wrap up a disappointing week after the way we finished last week with the first breakout over $30 an ounce in over 11 years. We're hoping for some momentum to come in this week, and it tried early in the week, but eventually got rolled over. Some margin hikes didn't help. And we're going to finish the week, like I said, in disappointing fashion. But let's look on the bright side. Not only has silver broken out above 29, it has also broken out above 30, and it's clearly broken out. It didn't completely retreat this week and fall back below 29 and paint a false breakout. Instead, this is now 2 weeks in a row. The spot price will finish the week north of $30. Recall how this worked in gold. When gold first broke out above $2,000 an ounce for the first time at the end of November last year, it consolidated above that level for 3 full months, posting week after week with a close north of 2,000 before it finally blasted higher. And now here we are up near 2,400. So maybe silver's going to do the same. Consolidate for a while before the next blast begins, which should take it up to the 34, 36 level. So let's not be disappointed with how the week went. Let's be happy that we're talking about $30 silver here for the first time in quite a while. And we'll see where we go next week. A lot of data next week. We'll get the latest PCE data as well. So join us at TFMR. There's a lot to cover. There's a lot to learn. There's a lot to discuss. TFMetalsReport.com. We hope to see you there. We hope to see you back next week for another edition of the TF Metals Report podcast highlights.